Oh, there we go. Let's get a quick audio and video. We should be good. All right. Great to see everybody. Happy Wednesday, everyone. Welcome to Charts and Coffee for Wednesday. And we're gonna kick off Charts and Coffee with a quick look at the broader averages. And just remind everybody that depending upon the market you're watching, say DIA, the Dow ETF versus SPY versus QQQ and IWM, I'm talking to Russell, depending on which one of these you're looking at, you do have various degrees of uptrending clarity. So one of the things that I personally try to do is I try not to refer to the markets because especially in an environment where we don't have overall clear risk appetite, to sort of just look at the markets and say the markets are weak is actually wrong. And it makes traders worry about things that may not be a reality in the sector or industry, stock, or even the broader index that they're in. And you sort of brush the market with just this general bullish or bearish opinion that will skew the way you're looking at opportunity. As much as there's persistent talk about tech, and I'm going to continue to say this because it does bake a few noodles. I don't say this to sort of, poke at that, but who cares about tech? Because the inordinate amount of attention that Amazon, Apple, Microsoft, Facebook, Google, Tesla are getting, that attention, remember, attention is finite. We only have so much of it, capital and attention. And if that's where the attention is, then by focusing on those names, you're not focusing and deploying capital in others that are basically beating the pants off of a lot of tech. So my first thing is, especially in this environment, this is not 2020, right? Especially in this environment in 2021, break down the differences in the structure of the indices. Once you've got that overall index view, then go to the next level. What is the structure of the individual sectors and industries? Then you get finally to the stock. In overall trending markets like we had in 2021, it's far better to play the tide. It's better just to go in as you can using ETFs and indices, just kind of go all in on a broad group of stocks. That works. And is it always a stock picker's market? No, but it's always a watch list builder's market. And a watch list builder will understand the difference between going in at the tide level and going in at the stock level or the sector or industry level. In this environment, it's going to be a little bit more acknowledging that risk appetite is not evenly spread across all markets. Last year was what? It was the buy everything market. This year, as a lot of traders are sort of accepting that 2020 was an unusual year, and it's not what we're getting in 2021. Now, what do? Tactically, you can do a couple of things. You can shorten the time frame, and that way you're not committed to longer term follow through. What is the benefit of day trading sometimes? You don't care what happens after a certain time of day. For me, 9:30 to 11:30, those 2 hours a day, I just need a little bit of clarity for 120 minutes, and then I can just let it go. Trail a stop, and I'm done. So I don't care what even happens the second half of the day. Forget tomorrow. And that's one way to deal with the environment that we're in. The other way is to get really, really adroit at watchlist building. Understand what relative performance is, and then focus on those regardless of what's going on in the broader media or what everyone's fixated on. And so I think if you just kind of deploy those two right now, especially right now, you're going to find that you're not looking where other people, where the other market participants are looking, and you're going to be just fine because there are pockets of really nice strength in this market. So having said that, I hope that helps because where you look, if any of you have taken any kind of racing school, my husband and I both have done the motorcycle racing school. You guys know the old saying, you where you look is where you go, right? And they'll teach you, don't look at the wall unless that's what you want to hit. You look down the track. And I know for motorcycling, those of you that are motorcyclists, you have to look through the turn. And I think you want to look ahead, pick your head up, and don't look at necessarily the conversations that are happening right in front of you because they're probably not going to be helpful. So anyway, that is a little advice on how I'm navigating this market right now, and to a high degree outperforming what's happening in tech. All right. So with that said, first question of the morning: why are we seeing a sell in crypto, and what are the implications? Um, well, gosh, how do I make sure I don't get salty on this answer? I love crypto. I've been in crypto since 2016. I love the sell-off right now that we're seeing. And so here's the thing. Either you're a believer in the blockchain. This is the easiest way to find out where you are in this narrative. Yeah, either you're a believer in blockchain, in which case these pullbacks, quite frankly, are the first really good opportunity that we've had to buy since August of last year. So if you're a believer in blockchain, you look at this and say, I see value here, and this is value on sale. It's just that simple. And how do you know if you're a believer in blockchain? Well, that's up to you to determine. But what's happening right now is the latecomers who got swept into the frenzy, who bought, quite frankly, I think anything above 35,000 was oh my gosh, I'm missing the move. Anything above 55,000, and this might sting, but you guys know I'm going to be straight up, was just stupid. And well, frankly, if you're going to be dumb, you better be tough. I'm not speaking to anybody in this room specifically, but sometimes it's really hard to just admit, I've done it, And so if I had bought over 55,000, I know where I am in terms of risk. And if I'm going to be dumb, I better be tough. And you ask a really good question. What are the implications? The implications are, if you have been waiting for an opportunity to get long Bitcoin, it's here. This is like the lightning deal on Amazon. This is Prime Day for Bitcoin, if you want to look at it that way. I've stepped out to the weekly time frame because it gives you context for the move. Now, I'm sure some folks might be relatively ticked off at what I just said, but this is how you have to ask yourself, why did you get in? At any place you got in. I'm not just talking to you, Andres. Why did you get in? What is your narrative, and what's your time horizon? And Bitcoin has to have a long time horizon. It just has to, if you are a believer in this narrative. I will also say, make this the very last thing that you look at in terms of how you can put your capital to work. I think that the idea that a lot of people believe that, Bitcoin's going to go to 200,000, 250,000, a million, or whatever is out there. Remember that the route there is never straight up. So for me, yeah, I think that the closer we get, this is the wave on the weekly time frame, by the way. The closer we get to basically this area between 39,000 and call it 26.5, okay, that area makes a lot of sense for me. If I'm going to trade this, I'm not investing in Bitcoin any longer. I was fortunate enough. Look, I'd rather be lucky than good. I was fortunate enough to buy Bitcoin in 2016, and I'm just hanging on to it. So if I'm going to trade this, a really neat way to do it would be with the new micro Bitcoin futures contract. And if I want to buy Bitcoin, this is the best opportunity we've had since this area down in here around 10,000, around the middle of last year. So I think this is wonderful. I think this is great. What are the implications? Opportunity, right? So believe me, I'm willing to start looking at and buying on this move lower for sure. Finally, really, finally. And what this does is it shakes loose a lot of weak hands. Frankly, where are the weak hands? Really, anything above 45,000 to me were the people that just bought as the narrative. Look, if you want to know when Bitcoin jumped the shark, and I think I talked about this yesterday, it's when everyone started putting laser eyes. Look for Twitter for folks to lose their laser eyes. There's your opportunity. Bitcoin jumped the shark in terms of frenzy when everybody had laser eyes. And that's when I thought, oh gosh, this is going to pull back. And then why did it pull back? This is how fragile the narrative is. When you think about really Elon Musk is sort of initiating it, but that's not all. We're seeing some restrictions being placed in China. We know that India had done something similar. So Bitcoin's still in this kind of growing pains stage. All right. I don't say that to dissuade anybody from buying it. I just want everyone to be realistic about, what your reasons are, and then making sure that you're actually taking advantage of this sale if that's really what your inclination is to be long. Okay. Hope that helps. I don't mean to pour salt on anyone's wound, but please remember, if you're going to be buying in a frenzy uptrend, remember the company you're keeping up there, and they're very, very fickle, because the minute the higher highs stop, as they did, and the pullbacks come, you're going to see participants move out in droves. And I would say this particular candle has got to be some stops being run. Companies who had stops on Bitcoin, this looks like a good old-fashioned stop run and anything else. So let those stops be run. Wait for an inside candle, preferably on the weekly, or a minor low, preferably on the weekly, and then get back to work. I wouldn't necessarily engage on this candle. Wait for an inside day or minor low. All right. Is it possible to make a full-time living being a solo trader? Larry, I think so. Is it easy? No, it's not. Is it possible? Absolutely. Absolutely. I know far too many people who do. I won't use myself as an example. I mean, that's, I hope, kind of obvious. But yes, is it possible? It absolutely is. Is it easy? No. As I was told by my first or second mentor, it's the hardest way to make an easy living, or was it the easiest way to make a hard living? Either are probably true. Do I read any reports? No. I mean, look, reports are other people's opinions. I like to get a consensus, one report over the other. I read a lot. I read a lot of analysis from hopefully opposing views. So I think one of the challenges with finding a favorite report or a preferred author or analyst is I don't want to listen to people who don't have skin in the game. I really don't care what they have to say, which means I shut off most of financial media. I don't care about people who have done something and then tell me what they've done. Again, which is why, while I would never question the skill of a lot of hedge fund managers, they're not telling me anything that they don't want to tell me when it's strategic to them. And I get that. That's fine. I don't begrudge them that. They're not a public service. So I think the best way to take advantage of analysis is make sure you're finding analysis that doesn't agree with your own. That's going to be far better. And also, of course, we're going to gravitate to people who look at the markets like we do. But look at it this way. As far as analysis goes, if you're a true believer in price, and I'm not talking about technicals, if you're a true believer in price, a chartist believes that what's known about a market is discounted into price. So things that you know, things that you don't know, they're all put into price. So I mean, price and volume, not just price alone. Price and volume to me are really the two most important elements. And then if you want to look at how different narratives and analysis impact that, then you'll see when they line up. But make sure you seek out opinions that don't agree with you. Right now, I'm very big on the reflation trade. It continues to pay me. It continues to be very, very powerful for me. And so I'm trying to find people who disagree with me. It's kind of hard to find right now, but I'm trying to find people who are writing analysis or taking trades that are on the absolute opposite side of what I'm doing. How do I trade a bear market versus a bull? It's still very much a correction market, and one would think that shorting a double red downtrend is the same as buying pullbacks in a double green. It's actually not. I do far better in short bearish markets. So I have a bias for them. I have to fight that bias a lot. I don't like parabolic uptrends. They're mind-boggling to me. And I don't like momentum trading, and momentum trading does very well in parabolic uptrends. Pullbacks are usually shallow, they're infrequent. And so I'll tend not to do well in a parabolic uptrend. We've got to know what we're good at. My biggest month last year was March, because panic to me is the most predictable. Greed is actually really unpredictable. It's great to trade vanilla uptrends, but parabolic uptrends, just full on greed, is very difficult to trade, I think, for me. The downtrend, get out now, I'm losing too much, get out now, I want to pay myself. Those are actually, I think, a whole lot easier. But the volatility of a downtrend is very different. So while identifying them is I'm going to use the same tools, my JT multi, the structure of the 8, 13, 21, and 34. I'll use the same tools to identify the opportunity. But I will say this for most people, most market participants, and you'll find yourself sometimes in one of the, some minority of this, but most market participants will do exceedingly well in uptrends, period. And there's a minority that do well in chop, and there's another minority that do well in downtrends. I'll give you a really good example. If you like to collect credit, you love chop. You love it. If that's your primary income producing, chop is fantastic. You'll excel in that environment while most are getting whipsawed. And then if you like downtrends, well, Stan Druckenmiller will tell you that his bias often is going to be influenced by the fact that throughout his career, he has made more money in downtrends. So he's usually a little bit more excited about the prospect of one, and he knows that skews sometimes his analysis. That's why he's a great. He knows what he likes to see, and he has to be aware of not wanting to, sort of conform the market to what he wants. So there is another minority that does very well in down markets. I tend to do very well in down markets. Unfortunately, the Federal Reserve has seen fit to never, ever let a market correction, true correction, occur again. That's okay. Overall, uptrends are going to benefit most market participants. So that's why I emphasize in what I teach and what I look for, find double green uptrends. And I think the vast majority of traders and investors are just going to excel in that environment. And I will also say it is the most predictable environment. Uptrends are the most predictable environment. So thanks for the question. All right. Next up is when analyzing market tides, do I study ETF inflows and outflows? I am aware of them, Matthew. You can look at them. So for example, if I'm seeing a sudden burst of movement and an ETF has gone parabolic, as many have, will I want to see that there are a number, the inflows are higher? For sure, because that would be very much related to my preference to understand size along with price movement. So that's kind of the volume box I get to check in some ways. Outflows, same thing. So do I like to see that? Does it change my mind? Not necessarily, but you can track it. And yes, I will. It's not a primary thing for me, but I'm going to be usually, I won't say vaguely aware, but just sort of tangentially aware of inflows and outflows. Yes. Do I set an alarm so I know if my option premium is down? Yes, I will use, Jonathan, yes. So I will use the alerts that are built into TOS. I don't know of any other platform that does this particular alert. The alert that I'm talking about is not an alert based on the price of the stock or the ETF or the futures contract. We're talking specifically options here. So TOS allows you to place an alert on the value, the price of the option. So if I'm in whatever, SPY, and I've got calls in SPY, and I don't want my SPY option to fall below a certain threshold of value, yes, absolutely, I will do that. Because look, one of the things that I don't want to do is have to stare at every tick. I don't want to have to be sitting at my computer looking for opportunities 9:30 to 4. I want to be able to get up. I want to be able to walk away. Walking away is the most powerful thing you can do. Just get away from the market. Just let the market do what it will once your thoughtful plans have been placed into the market via conditional orders. And then let your charting platform or your order entry platform be your trading partner. Let it track what you can't. I'll have it track sometimes 20, 30 names for me, and I want these names to reach a certain value. So let it be your trading partner. Let it alert you. I mean, your phone's going to ping, what have you. Let it be your trading partner. And once you take full advantage of that, you're going to find you're going to be able to follow your trading plan far better than if you were just glued to the screens. I'm glued to 9. Probably not something I want to do all day, every day. So anyway, all right, gang. And just like that, we're out of time. Thank you so much for joining me for Charts and Coffee. I'm going to be going right into the simpler options room for the open. Thanks as always for being part of the Charts and Coffee crew. Thank you all. Be good to each other. I'll see you tomorrow.